Now, it's been incredibly exciting so far today to hear about how so many different sectors are planning on leveraging new technology, and in many instances, generative AI, in order to reimagine entire aspects of their business operations. I'm going to take a little bit of a different tack today. I'm going to talk about what seems to be a chasm developing between the promises of AI on one side, which again is what we've been hearing about today, and the business community is wholeheartedly embracing, and then the potential pitfalls or problems of AI. And this is something that the public seems to be increasingly latching onto. And I think the risk that comes from this trend developing is that public perceptions of AI may sour as the hype cycle moves along. Now, there does seem to be broad agreement that some guardrails are needed to protect against some societal risks that could come from AI. However, what we've seen so far is that some of the approved rules have been controversial and criticized, and new legislation is stalled. My name is Tamlin Bason. I'm a policy analyst with Bloomberg Intelligence. Now, Bloomberg Intelligence is a research unit within Bloomberg. We have about 500 professionals. We focus on data, analytics, and research. We cover markets, industries, and companies, and this includes coverage of the regulatory landscape and how that landscape could impact the behavior and expectations within a given industry. Now, some of my colleagues at AI have put together a long-form deep dive report looking at the revenue opportunities that are attached to generative AI. Now, if you look at this chart, what this sees is that we expect there to be about $1.6 trillion in generative AI revenue through 2032. What this chart also shows is that we see generative AI spending rising to about 15% of global technology spending by 2032. That's up from about 2% in 2022. Now, we think first and foremost this spending is going to go to AI training. This is where we're going to see things like servers and storage and cloud computing being the beneficiary of this spending. The next wave will be on inferencing. This is where we'll see spending accelerate as more use cases come out, and things like software for drug discovery could certainly be the beneficiaries here. Now, what this shows is what companies are doing, specifically technology companies are doing to position themselves to be in the best position to get as much of those revenue opportunities as possible. So specifically, this looks at the capital expenditures for hyperscaler companies. And what I want to draw your attention to is the spike in spending from 2023 to 2025. Now, in total, that's about a $90 billion leap in CapEx spending. To put that in perspective, that's more than the aggregate CapEx spending for these companies in all of 2021. So what we are seeing already on the ground is these technology companies really heavily investing in expanding their own generative AI infrastructure in order to be in a position to compete for those generative AI revenue opportunities. Let's switch and look at how the public is reacting to generative AI, and there it's a little bit more mixed. There have been a number of studies that have tried to gauge public perceptions on AI. I'm going to talk about two of them today. Now, the first, and what's up on the screen right now, this is a UK government study that was done in 2022 and then again in 2024. Now, what you see is that there was an increase in respondents who view AI as having an overall negative impact on society. That increased to about 25%. So a quarter of total respondents view AI as posing a negative risk to society. Likewise, the share of respondents who thought AI would pose a positive impact to society slipped to 14% in that latter study. Now, this has been mimicked in a number of other studies, including one by the Center for Data Innovation. And this was a survey that was conducted in 2023 and then again in 2024. And what we saw across the board was that there was an uptick in negative emotions around AI in that 2024 survey versus the 2023 results. Likewise, there were drops in respondents saying that they were curious, interested, excited, or even amazed by AI. So what I think this does reveal is that there is a potential disconnect between business expectations of AI and public perceptions of AI. Now, to be fair, most of the public still does view AI neutrally, and it's certainly probable that as more use cases come out, that will organically shift sentiment positive. But there also could be a role to play by governance and regulation. Now, I think it's fair to say that regulators around the globe were caught off guard by the rapid pace of innovation in this space, but they haven't been entirely flat-footed in their responses. And it's probably a surprise to nobody in this room that the EU was the first to move to regulate AI. Those regulations were contained in the AI Act, which passed earlier this year and begins to take effect in 2025. Now, what the AI Act does is it regulates based on the risks posed by the AI system. So some things are going to be bucketed as unacceptable risks, and they're going to be prohibited. These are things like social scoring by the government, live biometric surveillance in a public space. However, below that are systems that are going to be allowed, but they are going to come attached with some oversight and regulations. And this is incidentally where I think we're going to find a lot of the AI systems that have garnered the most attention in recent years. They're going to be allowed, but they will be regulated. Incidentally, this is also the area of the AI Act that has drawn the most criticism. That criticism has come including from European government officials who are concerned that this could disadvantage domestic industry. You also have European business leaders worried that this aggressive enforcement of the AI Act could risk widening an innovation gap between EU technology companies and US technology companies. And some US technology companies have already begun withholding AI services from the EU. This isn't due to the AI Act yet, but this is due to a thicket of other regulations imposed on the tech sector. So there is growing concern that EU businesses and EU citizens may lose out on some opportunities associated with AI due to strict regulations and bureaucratic oversight. Now, what's it look like in the US? Well, in the US, it's a bit of a different story. Federal AI legislation is stalled. Prospects aren't likely for it to improve, certainly not this year, but even next year after the election, regardless of which administration is in charge, there's no guarantee that legislation will move at the federal level. At the state level, there's also some friction, which was recently punctuated when California's governor vetoed a bill that would have imposed some safety requirements on AI companies. So where does that lead us? That leaves us right now with European rules on AI about to take effect, but these rules have been criticized. We have no rules in sight in the US. And we have this unbound optimism about AI opportunities from the business side, but we have this increasing trepidation around AI from the public. Now, I do believe there's a risk of this gap widening if there are not baseline rules on governance. Now, to be sure, given the fast pace of innovation in this space, and I think what's justified reluctance by lawmakers to squash burgeoning technological advances in areas like medical research, it could be very challenging to find the right balance on regulation. However, at the very least, I think a clearer framework on things like transparency and accountability could be necessary to help form a solid foundation of public trust in AI. Moreover, the onus could fall on all stakeholders to begin finding common ground on AI so that we result in rules that help expand public trust in this groundbreaking technology, but don't result in rules that needlessly stifle innovation. Thank you very much for your time today.